Hello everybody, my name is Peter. Online I go by Goldsack. I'm relatively new to YouTube. I started a channel related to tabletop gaming a few months ago. However, I'm equally interested in the topic of investing. And just like any other game, I play the stock market for real. I have a regular full-time job that I do in the evenings, but during the day I pursue self-directed trading and investing. And I've been doing this for the past 15 or so years. So over time, I feel I've learned a few things about investing, especially with respect to dividend stocks, that I would like to share with you today. And to begin with, I'd like to make one thing very clear. Of all the varieties of investments that I've owned at one time or another that are available to any person who has the ability to save money, the dividend payers are usually the best option. So out of, say, crypto, commodity, ETFs, options, Forex, penny stocks, whatever you can think of, your dividend paying stocks, I feel, should always be the foundation of whatever investment portfolio you feel like creating for yourself. So in my many years of investing, I can honestly say that I've never owned a dividend paying stock that melted down or blew up in my face that cost me a lot of money. Now, could that ever happen? Well, if a company is able to pay dividends to its shareholders, presumably it's fairly stable and healthy and safe. Losing big on one of these, it's never happened to me, so I can't even tell you what that may look like. I can't make the same claim about penny stocks that I've tried to day trade, or even ETFs that I've tried to swing unsuccessfully. Believe me, I can tell you what screwing up one of those trades is like, but we're not covering that today. Dividend paying stocks is what I'm talking about, and quite simply, they are so good, honestly. Anyone that is thinking about buying some shares of a large cap company that pays out should do it. If you have the money, I would ask, what are you waiting for? And that's the one thing I love about creating an investment channel in dividend paying stock too, is that you can just start. It's never too late. There isn't, like a huge money barrier to entry, like say in Forex trading, where you really probably need about, I don't know, maybe $10,000 to start up to really make an immediate splash. If you want to stack dividends, you can just start at zero right now, today, like everybody else did at some point in their life. And over time, you play the compound interest effect into life-changing money. And if you're watching this, I know you probably appreciate how pennies per share over time can become dollars, tens of dollars, hundreds of dollars per month. And if you ever reach the point where you're making over $1,000 every month in dividends, your wealth could potentially mushroom so fast, it would seem unbelievable to people who don't know about this stuff. Anyway, I recommend having a totally separate account for your dividend stackers. Don't mess with them for the most part. Let them do their thing, which is pay you money for holding them. Now, this may be boring, so if you're like me and can't not touch the more volatile investment options too, create separate accounts with different banks or with different brokers if you want to explore swing trading or day trading, for example. The point is, don't ever tempt yourself into dismantling the money-making engine that is your dividend account to pay for experiments in crypto and stuff like that. I've done it. I've learned not to do it again. So I believe compartmentalization of your finances can be very useful for a variety of reasons. So what do you buy exactly? How do you know what to buy? Well, if you're just getting started in the investment game, I recommend the same stock symbols as mentioned in all the other popular YouTube videos you're going to find on this very subject. Other people on here mentioned very solid defensive plays that in the long run are very likely to pay off. Okay, so I call that level 1 dividend stock play. And there is nothing wrong with doing this at all, don't get me wrong. But now I will describe another approach you may take with dividend stocks that I hope you may find equally rewarding. I call this level 2 dividend stock play. This is how it works. So you can do a general internet search for stocks that pay the highest dividends. I'm in Canada, so I refine my search for symbols traded on the Canadian Stock Exchange. You don't have to do this. But the reason why I do it is if I collect US dividends, I lose 15% off the top of any distribution that is foreign. I still might get US stocks in my dividend account, but I'm just saying I have to be mindful of this withholding tax or whatever it is they want to call it. It's a tariff, basically. Anyway, next I search for stocks that pay me monthly. You can go quarterly, biannually, or yearly. But for me, there's no doubt at all that getting paid every month is more fun and exciting. So search out Canadian monthly dividend payers, take a look at the highest payout ratios, and then start looking at charts. If you'll notice, you'll probably be left with 20 or so options. Many of these are real estate investment trusts. I actually don't care what they are so much. I'm just here for the dividends. So you determine the distribution ratios. You can use investing.com or any comparable website. And about once a month, or right before I buy stock, I make my own calculations as well. I determine what the monthly dividend is per share, and then you times that by 12 months and divide the result by the current share price. And you slide the decimal over a couple places and you'll get an annual payout ratio in percent value. So the less defensive plays that have the higher payout ratios tend to trade within price channels that are relatively stable over time, or ideally they ascend slowly. My point is, at certain key points, you can play the swings, even with dividend pairs, selling at the top of price fluctuations and then rebuying the dips. And you don't have to just hold forever. You can. All I'm saying is that with a little bit of work, you can get even more out of your portfolio if you sparingly and periodically play the swings. Here's an example. This is something I did earlier this week. So for about 6 months, according to my calculations, Slate Grocery REIT, SGR is the symbol, was sitting at about 8.2% annual distribution, and that was one of the best deals that I could find. It owns about 1.3 billion in real estate. And by the way, I checked it out, the website and everything, so it's no joke. Anyway, so about 6 months ago, I started building a position in it, and I got it up to 280 shares. The book value of this position was $3,679.50. So my average share price was $13.14. It paid 7.2 cents per share every month. And it was in the middle of the month too, I think about the 18th. So it was pretty cool to get money in the middle of the month, not necessarily always at the start or at the end, like when most other companies pay out. And anyway, in case you're wondering, it turned out to be $25.20 every month just by holding 280 shares in one position. All the while, the market value of SGR increased steadily to the point where the share price went up to $15, which meant the market value of the holding became $4,205.60, which was plus $500 above book, what I paid for. So I sold. Why would I do this? You're supposed to hold dividends forever. It was working. But here's the thing. SGR hit its head on the $15 level multiple times. It seemed toppy at that price. It hadn't increased its dividend during the run-up. So instead of getting an 8.2% return at $13, you only got like a 5.6% dividend at $15. Plus, as it got more expensive, it became a worse deal from my perspective. And I know several other monthly dividend plays with a better return than 5.6. So for now, I demoted SGR to my watch list. In other words, I took the money and ran. If it pulls back to 13, I'll just buy it again. Only this time I'll get 30 or 40 more shares with the 500 I got from selling at the top of its trading range. If it gets stuck around 13, I'll take the dividend again to wait, maybe forever, as long as they maintain the 7 cents. It's still worth it. If it breaks out above 15 and takes off like a missile without me, so what? I've got $500 worth of dry powder at worst for my next move. Plus I got paid every month just to play the game. So I hope this example might encourage you to consider adjusting and optimizing your dividend plays. If you are significantly ahead in the green on something and the distribution becomes stale, consider switching things up periodically, but not too often. You'll know when it's time. One other thing, and this is important, periodically there might be political turmoil that could affect the market significantly. Sometimes you can even see it coming a mile away. Like right now, for example, there are major problems in the Ukraine and Russia. If things go bad and a fight breaks out, you'll probably want to be in cash. I'm going liquid with 50% of my entire portfolio. So who knows how badly war could impact the market. I'm guessing it will be bad. So if prices drop, I'll be ready. And I will record my plays. And this should make for an interesting video next month. I don't know what's going to happen, but it doesn't look good. And I hope I'm wrong about this, but we'll see soon enough. So my tip this month is SGR. Watch it closely. I'm buying any significant dip back down to 13. It might continue to rise. It hasn't increased its dividend though. So just know you can get better value than SGR for your dollar out there right now. So thanks for listening, and I will aim to make a dividend stock play video each month. I will include a testimonial of my play, my experience with the stock, so you can get a sense of what these things are like to hold. I'll include a tip when I'm watching, and I'll close with a question because I always appreciate feedback, and I want to know what other people are buying and selling. This is a safe place to brag about your dividends. Let's hear it. What do you got? What's working and what isn't? Tell me. So stay tuned and good luck with your picks. And whatever you do, keep stacking those dividends. Thanks for watching and stay tuned for more content coming soon.